Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, September 10th at about 2:20 p.m. Eastern. Well, U.S. producer prices increased solidly in August, leading to the biggest annual gain in nearly 11 years, suggesting that high inflation is likely to persist for a while as the COVID-19 pandemic continues to pressure supply chains. The Producer Price Index, we call that the PPI for final demand, rose 0.7% last month after two straight monthly increases of 1%. You've probably seen that in the prices around you. The gain was led by a 0.7% advance in services, also following a 1.1% jump in July. So we all know prices are going higher. We can see that around us, that's for sure. And on that note, let's go on and look at three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 Spider, symbol SPY. This is the exchange-traded fund that closely follows our benchmark S&P 500 index. And we do follow the SPY because this gives us the mood and manner of the market. And of course, many stocks will follow the S&P higher or lower. So the SPY closed September the 3rd at the new, let's see, right? I don't know if you can see it back here. Right back here, at any rate. So it closed September the 3rd, and that was actually when we were together last Friday. It closed September the 3rd at the newest all-time closing high at $453.08. Now, today when I captured this chart, you can see the SPY was trading at about $448.58. That would be 448.50 on the S&P 500 itself, and it's just about 1% below this prior all-time high. Now we know that the last pivot low on in this particular trend came in at August 19th. The SPY moved down to a low of 436.12 back on August 15th. But like it has done so many times in the last months, and even looking left on this chart going further back than the first of the year, the SPY has just bounced off that 50-day moving average time and time again. And it did so the last time, again, on August 19th to a low of 436. So it's just been picture perfect. All we can do is sit back and and say thank you. Until, of course, things change, and let's not get too comfortable. Let's trade wisely. So our resistance still remains here at 454 on the SPY. Support is down here right where it is actually today, sitting on the red line, the 20-day moving average at 448.50, right in there. Then, of course, we have more potential support at that 50-day moving average, the green line, which comes in at $448.08, so call that 448. We do want the SPY to stay above that line. It's done so for so long, it's become a pretty darn prominent trend line. Then we can, again, look down to the next low down here at about 422. Then we can look down to the 20-day moving average at 407. So there's a lot of potential support below price right now at moving averages and price points. So let's keep an eye on it. But very important to see if in the coming week the SPY can stay above that 50-day moving average at 441 and change. Okay, our next chart today, as always, is the QQQ. As you all know, this big index represents the NASDAQ 100, a major index in the market. Top holdings include Apple, Amazon, Facebook, Alphabet, that whole group. Now, the QQQ made a new all-time closing high up here on September 7th at 382.11. And today when I captured this chart, as you can see, it's pretty much right there, trading at $379.60. So basically consolidating during the last week. The QQQ remains nicely above, at least at this moment in time, nicely above the 20-day moving average, coming in at 374.65, and the 50-day moving average, which is coming in at $367.91 right now. We can round that up to 368, certainly. Now, like the SPY, the QQQ did do a pivot low on August 19th, and like the SPY, it held at its 50-day moving average. So that's a good thing. It fell down to $359.96 down here. But again, it bounced right back up, consolidated, up again, consolidated. Now, though, we're watching as it rides atop that red line, the 20-day moving average. Of course, we want it to stay above that line, and of course above the 50-day moving average, pretty important at call it 368. We do still have resistance here at 383. That would be our resistance point. And again, these moving averages, the 374, the 368, those are our support lines. Want to watch that 368 right at the 50-day moving average. That's pretty important. Then, of course, again, we've got that 359 low from August. And then on down, we can see the 200-day moving averages coming in here at 335. So let's just keep an eye. We talked last week about the QQQ becoming slightly over the overbought line here, and that usually can not immediately, but sometimes take a little hitch out of a giddy up there. So we'll see how that works. Please remember to trade wisely and keep your stops in. Our final chart for the day is a daily chart of the VanEck Vectors Video Gaming and Esports ETF, symbol ESPO. Now, we haven't looked at this one before. I found it really interesting. It has 26 holdings. Top holdings include NVIDIA, AMD, Sea Limited, NetEase, and Take-Two Interactive. Now, you can't see it on this screen, but the ESPO opened as an ETF in November of 2018, way down at $30.67. Then through the years, last 3 years actually, it climbed up to a high. The all-time high was right here. You can see it on the chart. It was February of this year, and at that point the ESPO rose to a high of $81.39. Then it did start to give up some ground here, fell through the 50-day moving average, moved down to March lows of 65, then down to a May low gradually at 63. Then held that low right there, if I can draw a reasonably straight line, and actually made a slightly higher low in August of this year, right around at $64. So being that it held there and even made a slightly higher low tells you buyers are coming in, at least at the moment, not letting it retrace all the way back to that May low, and that's bullish. Now, when I captured this chart today, the ESPO was trading at $69.77. If we look at this chart, and I know it's probably hard to see for some of you, if we look at it a little more closely, we can see in July when it fell below the 20, the 50, the 200-day moving average, what it did start to form here was an inverse, if you can see it, an inverse. What it finally formed was an inverse head and shoulder pattern. And we can actually label the 200-day, the black line, the 200-day moving average as a pretty decent shoulder line for this inverse head and shoulders. We can draw one more line in here if we want to. However, we can see that since that August low, whether you care to look at the inverse head and shoulders or not, so far the ESPO has been climbing higher. And it is back today above the red line being the 20 line, being the 20-day moving. There's the 50-day is the green one. You can see how it moved in the last couple of days. The 20 is moving toward the 50, which is bullish. The 50 is holding today, and again, prices in here at $70 I'm sorry, at $69.77. So I'm going to keep an eye on the ESPO in the coming week, and if and only if it can stay above its 50-day moving average, again, that's $68.30, if it can stay above that line, and if and only if the NASDAQ, call it the QQQ, or just call it the market and use the SPY, but if the market is positive in the coming week, not if it isn't, but only if it is, I will add a small position of the ESPO to my trading portfolio. My initial stop I'm going to put down at 66, and of course by then my stop will be trailing if it starts moving up. When and if it rises above the 200-day moving average and above $71.50. I want it above this last little pivot high. So if it does that, if it moves up and over that, if you want to call it 72, that's fine too, then I will add to my position, and of course my stop will be a trailing stop. So with all that said, you may want to keep an eye on the SPO in the coming week. Okay, before we go on to final thoughts, please know that if you'd like to become a more successful trader, please check out my trader training programs. You will like my simple strategies targeted to swing trading, trend trading, bottom fishing, and more. Please know that these programs can help you increase your gains quickly and easily. That's my point in making them, and that's what you can do. To see all of my online training programs, simply go to the link on this screen right here or click on the orange button below. And now for final thoughts, the question this week is, do I spend the necessary time I need before I trade to complete the proper research and plans for each trade? Further, what about this? Do I think about my preparation process as a chance to discover new opportunities? There's a thought. That's happened to me. I've just tripped over opportunities while I've been researching. Now, as with most professions, preparation is the key to success. You all know that. So with that thought in mind, consider doing your preparation after the markets close the prior day to when you're going to enter a trade or thinking of entering a trade. And that allows you to get out of the heat of the open market, and it allows you to develop a plan to trade stocks based on your indicator setups and your risk-reward strategies. Then you can look for confirmation on the following day, on your entry day. So if you get all this done ahead of time, this allows you to be in a more proactive mindset, which is so necessary and which makes you feel way more in control of your trades. Now, know also with me that self-confidence and discipline are directly correlated with the perception of our levels of preparation coming into the trading day. So if you're prepared, you're going to feel self-confident, you should, and your discipline will be in place. And that leads to our ability to perform successfully. Good preparation also influences the skill level that we believe we possess. It influences that. We all need to find time to prepare for the next trading day to build up our feel for the market and our confidence. Now, one of the key components of successful trading is spending enough time to complete the research you need for each trade in a calm and confident process. And then plan each trade with firm entry, exit, and profit target prices. And when I say confident process, I mean that you are confident, not that your stock's going to go up or down, whatever way you want it to go, but confident in your ability to be disciplined, to get in when you want, get out when you should, by all means. That's what I mean about confident as a trader. Also, how would you prepare if you thought of your preparation process as a chance to discover new opportunities that would lead to higher profits? Feels good. Try this. Take more time for research and preparation for the next 2 weeks, and you should see better trading results. Finally, please know that this is a great time to check out my trader trading programs. To see all of my online programs, simply go to the link on this screen or click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is the Market Now.